All right, guys, let me get this started. So real quick, we're going to take a look at US 30 on the daily time frame. We do have some wick rejections right here. Previous daily, it did seem like it was trying to sell off as well. It did end off bullish. Today, we opened the market with a gap in the market. So I expect for this to kind of come down, retrace during London session. This would look something like this. I'm not sure if it's at a fib level. It is. It's not really at a fib level that we kind of like, but it could respect that fib level. It didn't really break out of that. Real quick, kind of looks something like this. I would take this setup. It would look something like this. You would want the proper risk management. Really simple. This is a 61.8. Drops to the -27 extension. Keep it simple. However, though, I kind of want to see it on a bigger time frame. Look at what the weeks are looking like. That week gave us a wick after grabbing liquidity right up here from April. I do still feel like it's going to grab the following liquidity up here. This liquidity would be the ultimate liquidity throughout the week. So I still want to say that it's going to have a lot of bullish momentum. I know that this wick is kind of telling us that it won't have that momentum like that, but after seeing this gap, there's a lot of pressure still pushing up to the upside. Let's keep that in mind. So overall, I want to say that there's going to be a lot of bullish momentum still in this market. We do have news coming out. Let's take a look at what's going to come out for us. We have JBP, we have USD right here, we have job openings. It's going to let us know how many job openings are actually in the market, if it increased or not. I believe unemployment rate wasn't looking too good. That possibly means that there's not a lot of job openings open. So that going forward, we do have unemployment claims coming out on the 30th again, on the 3rd of August at 8:30 in the morning. That always brings a lot of volume into the market. That same day, we have ISM, which is also the service of PMI. That's also going to be a huge impact in the market, just to the fact that it's just going to add a lot of volume. We do have August 4th. We have earnings, average earnings, NFP, and then unemployment rate change. So this is an important number, because if that doesn't change, then that means that the economy is not doing good. We want to see a lower number of unemployment rates. That means that people are not applying for unemployment and more jobs are on the market and people are actually working. If that number is higher, that means that the economy, there is no job and inflation is still squeezing things out. Okay. Just trying to make it really quick and simple, guys. It's like a NAS 100. NAS 100 also opened up, not with the gap, but it opened up pushing up aggressively today. I don't know if there's there's a little wick rejection right here. I'm seeing a little divergence coming on right here. You guys with a solid line there. Right up here. You guys see that divergence? Very simple. That's all you guys have to know about the divergence. It's not really going to be a fib level. We're on an overall fib level though. Maybe draw your fibs from this swing high to the swing lows down here. You can tell that we're just building up that momentum to continue pushing up. The 4 hour still hasn't gone overbought, so I can possibly still see some push up throughout the Monday, throughout tomorrow. So yeah, that's what over to GJ. GJ will probably now start selling off. It came back up to a demand zone. To a supply zone. Let me draw that out for you guys. This area right here, that would be considered an order block. We did open with a gap down in the market. You guys see that? Notice how we pushed up, cleared the gap, and now went right back down. This is another gap to the market. These are candles that you guys have to be worried about, right? Because there's still a lot of pressures in two different directions. However, though, every single time we gap to the downside, that's the bearish momentum that we're trying to see here in this market. Let's take a look at gold. I actually was looking at gold on daily. Gold kind of is building that structure where it's selling off. I would wait for another spike up maybe to continue selling, but I would still see gold selling off nicely from here. I want to see gold would probably come down to the end of the week where we'll probably see like 1930 to 1914 if it decides to give us that volume. If not, we're just going to have some consolidation here. I would want to say it's going to look something like this. I feel like I got some patterns like this throughout the week. If that doesn't play out and it continues pushing up, I doubt that it's going to push up though. If it does push up, then I would probably want to see if it respects the trend line that we have drawn out right now. If you guys want to put it at the top of the wicks, you guys can. Wait for another wick entry right up there and then sell off. Obviously, pullbacks are due, but the way the market works, I don't think it's going to give us a pullback we want just yet. You're going to have to wait for news to come out to actually see that momentum that we want from these from this commodity. Oil, this is a trade setup I had a while back. Kind of crazy how I just draw them out, forget about them, and continue. We had rejections right here. This is just something I'm looking at right now. Also a divergence that we had. This is a divergence. This played out perfectly. We're rejected again. We hit that TP on the negative 27 extension on an overall basis. We'll look at the dailies though real quick just to make sure we understand on which direction the market is going. We are on a bullish market. So depending what happens on a Monday, I can still see continuation of the bullish market. Oil has been going up, hence why gas prices will slowly start going up again. I want to see it come up and take out the following liquidities. This area up here would be an area of interest. If it does come up there, then that would be an area where I would take a sell from. However, it's overbought. The market is overbought, so keep that in mind. Just because it's overbought doesn't mean that it needs to sell off. It will continue buying up until the buyers are exhausted, and then sellers step in aggressively. It might just be a small pullback, kind of like something you see right here. That pullback, you'll understand that that pullback is just to trick you guys out, entice some sellers to join into the market, and then it just takes off again, eating up liquidity and continuing on the bull run. So NASDAQ, yep, we'll probably just try to wait to see if NASDAQ does decide to sell off a little more. It's in an area where it could sell off, but we've been on a bull run. We've been on a bull run for the past couple days. I think it's been like a month or so. This is December, so the whole year NASDAQ has been on a bull run. So I wouldn't really fight against NASDAQ's momentum. I would continue trying to find these lows, these demand zones that we see right down here. These are demand zones that you could kind of get your trades on. If you guys notice, waiting for these potential setups would be ideally, right? That's a 347 pip, 54 points of a move. If you guys were to draw a fib from this low to this high, you're looking at an 88 rejection. That's the type of rejections you guys want to look for, right? A lot of people are waiting for the liquidity grab. That's when it gives you those rejections and takes off. It's good to know that. I trade a lot of smart money concept, so you guys understand that we wait for the liquidity grabs, and then we wait for the change of characters, and we wait for break of structures. This is what we really look at. So that ties in with demand zones. It's kind of part of it. Demand zones is what we would kind of consider an order block, but a demand zone would be a candle like this. I'm sorry, guys. A demand zone, an order block would be this candle right here. That's the candle where orders were taken or were being taken beforehand. We rejected that same area now. That's where, orders are still being held at, and that's where it takes off price. If you guys don't believe me, let me see if this would pop up for us. It's probably not, but right here. Okay, so it's not going to pop up here, but something similar like this. These are order blocks, order blocks, order blocks. Okay, so it's kind of similar. That's already passed, so that one's not going to show. But notice how when I do go on a higher time frame, that's the same area where we had an order block, the same area I was telling you guys we're rejected from. So that's a major order block area. We do have an order block up here that we're kind of, you could tell that it's really pushing for it. This is in the 15,915 area. So be advised there's a negative 27 extension right there, and that was from previous Fibonacci retracement level of the 88. So keep that aware. If you guys are not in my Discord, you guys will not see this setup right here just kind of play out. This is not a setup that we're taking live, but it is a setup so you guys can understand what the outlook is supposed to look like. If you guys want to join the Discord, I'll drop it now in the comments. We do have a free side of the Discord. If you guys want to join the paid side, a lot of the paid members enjoy it. We do live trading every day, Monday, Tuesday, Wednesday, Thursday, and then Friday's the only day we kind of keep it open. I believe that everyone deserves to have a break, so definitely I advise that. I would like to see what would happen here with this market. Real quick, going back to GJ, we got a little fib levels right here. Fib level there, look at the 4 hour, see some rejections. This is looking nice right here for a continuation of sells, right? The only reason why we saw a lot of momentum this past week was because of the news that came out for the Japanese yen. It was really tentative with the Japanese yen. That's why you see this crazy candle here like this with the wicks on both sides. It's a doji candle. That's really important to understand. News isn't something that you want to predict the direction in. News is something you want to understand what market structure is doing ahead of time to be able to understand that it's just going to bring volume for the direction that your trade is supposed to go in. If you guys understand what that means, is that if this is the market structure right here, you have this demand zone that was formed right here. You understand that it came back down, took that liquidity, and then rejected back up. This trade, I actually took this trade. If you guys are a part of the Discord, you guys would have seen that trade that was sent out here. Let me see if I can find it. The same area I was telling you guys about. This is the liquidity. I had waited for the news to kind of play out the way I wanted to, took the trade. That was my TP. Obviously, I'm sorry, this is a chart from my phone. So these are the profits from it. It's a 2.5. So you guys see that we actually took the trade. 432, the spreads might be a little different from both ends. So just understand that that's what we're looking at. That's this trade up right here. It did reject this moving average that I have. I have a moving average of 66. That's the moving average that will reject it. That was another beautiful trade to the downside. Let's measure that. That trade right there was 412 pips. 412 pips is a lot for GJ. For those who know how to trade GJ and stuff like that, you guys understand that that's actually a big amount of volume that was being injected into the market. US 30, if you guys know me, I always trade US 30. So US 30 is all I traded. I had some sells on US 30. I have it right here. I had some sells on the 27th. Made my money, made 100 points. If you guys know me, I just go for 100 points and I walk away from the markets. Hence why you guys can see it here. This trade setup was, I can show you guys the trade setups that we have. So this was a trade setup. This is what it looked like right here. 658. We took it down to this little wick, rejection of the rejection of the moving average, the 66 moving average on the 30-minute candle time frame. So that's something I just wanted to show you guys. These are kind of trades that we're looking at, but looking forward, when we're looking for these markets, I'm still seeing some bullish momentum. Again, I told you guys we're waiting for this liquidity grab up here. I want to see what happens from there, even though it is forming some rejection wicks already on the daily, but it's a huge gap that I'm seeing. This is a really big gap. We are going to fill in this gap. We will fill in that gap. If it's not right now, it will be over London session. You could possibly get like a little 100 points right here. If I were to take this trade, it would look something like this. That's only for me though. That's something that I would take. You guys draw your fibs. Like I said, around that 61.8. Area right here, fill in that gap, and then just continue taking off. All right. I think we're kind of going, we went through that. You can look at the DXY. The DXY started pushing back up again. which is a good feeling. This right here, if this continues pushing up over time, US30 will probably sell off. Commodity, gold, I believe is the opposite, right? So yeah, so the DXY pushes up, gold starts pushing down. Okay, so looking at what the market is showing us, it kind of seems like that's what's a possibility is going to happen. Probably get a pullback, and then we'll start selling it off again, and I would be able to see the rest of the currencies and anything that's tied up to the US dollar just keep pushing. It is at a low. This is kind of at a stable point again at the 100. That's why federal funds were they kept squeezing to be able to have inflation come down. As you guys can tell, we did reach a high of 114 on the DXY on the dollar index. So that's really, really important. I think that's all. I think if you guys have any questions, you guys can ask it now. But for Sunday outlook, I think you guys are kind of advised on what we're looking at. So kind of give you guys everything for right now. So I think you guys are good. I'm gonna stop it right. Or if you guys have any question. Did you look at gold? Yes, I did look at gold. We're still seeing maybe some push down first before it decides to take off again. I am seeing these sells maybe to the 1940 area first, and then maybe come down to the 1927 area. But I want to see it come below this low. That's what I would want to see. Maybe it's not going to come. Maybe it'll just hit the 1940s and then take off again and create a little divergence. Well, as an overall play, yeah, you could probably see the 1900s throughout time. We could see the 1900s. I would want to say 1914 first. The 1900s is too much of a psych level for them to give it to you guys like that. We're currently at 1958. You're talking about 580 pips still to the downside. That's a big move for gold, but there is some volume that's going to be pumped into the market next week. So I don't see why it can't do that. You know, gold has been giving some massive bearish candles. This tells me right here that right now who's in play, who's in power in the market right now for gold is the bears. So if we still continue to see these bearish candlesticks form and stuff like that on the daily and yeah, I think on the daily, on the 4 hour, on the higher time frames, I could probably tell you guys that yeah, we could eventually see the 1900 area.